And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market prep. Tuesday, May the 2nd. My name is John Hogan. Thanks for trusting me with your time. As always, we're focusing on seeking accurate context, always thinking about risk management and remaining patient in our trading. If you're already in the markets, hopefully things are going your way. As far as economic numbers this morning, we know, because we're informed traders, that the FOMC meeting begins tomorrow with the release tomorrow at 1 p.m. Central. 9 o'clock this morning, factory orders and the job openings labor turnover survey is due out. Now, this is the first of 4 economic numbers due out this week. Give us a good look at what's going on here in the employment realm, of course. As far as where we are now, stocks looking steady to lower as the markets look forward to a lot of data, a lot of information, a lot to think about, and a lot to digest for traders. The FOMC meeting, we know about that. We're expecting a 25 basis point rate hike, and then most of us are hoping for a stop, or at least a slowdown or a halting of rate hikes for the rest of the year. We've got the first of 4, again, employment data releases this week. Increasing pressure on the debt ceiling issue. We're hearing more and more about that. That's going to be increasingly a decision-making thing, if you will, with regards to trading and investing until this thing gets resolved. They're still in the middle of earnings season. Well, kind of on the far turn here on the earnings season. We've got Apple, the biggest one this week, due out on Thursday after the close. But today we have Pfizer, HSBC, BP, Uber before the open. I haven't had a chance to really look into those too much. And we are looking at AMD, chip maker, Starbucks, and Ford Motor Company after the close. Crude looks like it's really just still kind of hanging range bound, looking for new information. We know that we do have the API coming out today at 3:30 Central Time. They're looking for a 1 million barrel draw, but it's anybody's guess as to what that's going to come out at, as well as the EIA petroleum status report tomorrow at 9:30 a.m. So lots to think about, lots to do. With all this kind of coming out, knowing the FOMC, knowing all this employment information is coming out, I think we're seeing a lot of traders doing a lot of positioning, a lot of hedging, and a lot of preparing themselves for whatever may happen over the next few days. I'm expecting increasing volatility, although the VIX right now is 16.62, a little higher than it was yesterday at this time and a little bit higher on the day. The dollar index is higher, 102.18, where it was 101.77 yesterday. We saw a little spike in the dollar yesterday that put a little chill into gold and the euro. The yield on the 10-year currently 3.54%, where it was 3.47% yesterday. Down slightly on the day, but higher than this point yesterday. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. And again, we're glad to see that you're here. On a sad note, one of my favorite songwriters, performers passed away yesterday, Gordon Lightfoot. You know, back when I was a Led Zeppelin head, if you said you liked Gordon Lightfoot, you were probably mocked. But as I've grown older, I've learned to really appreciate him as a songwriter, as a performer, and I know I'm going to miss him. But he was, I think 80 something. I think he was still performing as early as recently as last year. So a real troubadour, and the world is losing a good one here with Gordon Lightfoot. So we are going to be jumping into the charts here very shortly, but I always want to say good morning to everybody. Scott saw and he conquered wins the prize today, first in the room. Pete, good morning. George, good to see you. Lacey says good morning to you as well. Shaw, Brian, Timothy, Will. We can see the new horror show on the debt ceiling. Yeah. Snowflake, not quite the first one. You're getting there, though. Dennis, good morning. George Duquet, Bill Phillips, Jason, John, Anissa, good morning. Henry G, Rusty Golfer, Yarich, Shy T, Charles March, Jimmy Decker, Sarah Hall, good morning, and prayers and love to you as well. Stephen, good morning to all. Well, okay, we're going to try and get accurate trading context. It's always a hypothesis, but we're going to do our best here, Stephen. Good morning, Vince. Ron Merlot is with us. Good morning, Ron. Rooster, Bear Goes Long, Haggle Matters. Good to see you. Andy, NASDAQ, Joe, good morning. Tranquility is the word for the day from our good friend Joe. JD, just waiting for a close above that trend line on CL. Trading Research, Travis, good morning. Haggle Matters, Joseph, good morning. Pershatam, Alejandro, Gordon Lightfoot, yes, prayers to Gordon. Vlad, and Big O. Big O? Is that Orion Samuelson? Good morning, Brandon. I wonder. You guys know who Orion Samuelson is, don't you? I actually have something hung in my office here that was given to my father by Orion Samuelson back in 1969. We're going to do a tour of my office one of these days. I've got some cool trading artwork and memorabilia hanging up here. We'll do that one of these days. So we've got the market prep. We've got Make Hogue Money this morning. Looking forward to seeing what you guys come up with for some trading ideas today. I'm going to just kind of sit back and let you guys make the choices. Treat me like I've never traded before. It's going to be hopefully fun and profitable and educational all at once. It's everything you ever wanted in trading. Here's the Zoom meeting if you want to register for the Zoom meeting and join us for the Zoom. But you can always, of course, watch it on YouTube. And good morning, Don. Good to see you, Diggable Seeker. Brandon, good to see everybody again. So let's jump into the charts so we can get into Make Hogue Money at a reasonable time before the equity open. So let's take a look at what's going on in the S&Ps. Here's the daily chart. Well, pretty good shot at weekly kickoff high yesterday. Went a tick through it. Sometimes you're right on, sometimes you're not. But there's never a finite level or number in futures trading that you can count on all the time. If you hit it like we did yesterday, it's more luck. But we did see, I think, an adjustment in inventory in longer time frame, and that's what these weekly kickoff levels are meant to do. They're meant to show us areas where we may see longer time frame participants enter the market to adjust inventories. And I have a feeling we saw that yesterday. And if they did adjust inventories, they liquidated longs. They took some profits, perhaps. We lost 1,500 in open interest. And most of it, I believe, was after we reached that weekly kickoff high. What else did we do yesterday? Well, of course, we're looking for hedging and positioning for the FOMC meeting. We finally put an excess high in the daily time frame, in the day time frame, regular trading hours. Here's the 30-minute chart. Here's the high yesterday. We've taken out all of the previous overnight highs that we've left. Anissa, we knew that was going to happen. The only question was really going to be when. Here was that previous overnight high here. We're just barely able to get it on this chart, but here it is now. We've got an a recent high in the regular trading hour session. Okay, what does that mean? Well, take a look at the daily chart. Hello, JT and Bluebell. We've got a degree of excess on this daily chart. Price got too expensive and was rather swiftly rejected on that daily chart. Here it is on the 30. So we have some upward movement up to here. Look where all the volume came in. It came in after we put in the high. Well, a lot of the volume after we put in the high. We kind of ground higher, and then we just kind of broke at the end of the day. So that's what leads me to believe that the fact that we got to this level caused longer time frame traders to adjust inventories and to get out of some long positions. Well, what does that do? It takes actually selling power away from the marketplace. However, we closed here. We almost left a late spike. Is it kind of a late spike-ish type of situation? Maybe, but we do have overnight inventory that's largely flat. We do have a gap open with high probability. So I think the major nuance that I'll be focusing on today is if we can close the gap relatively early. If we close the gap relatively early, the gap close could actually be resistance. But if we begin to show acceptance back in range from yesterday and certainly back in value, then I would probably look for opportunities to get a rotation back into the range from yesterday. So the gap rules are really what I'm going to be focusing on this morning. If we open with a gap, we can't close the gap. We look for continuation to the downside. We open with a gap, close the gap. We monitor for reacceptance of the previous day's range. If that is the case, then we look to go in the other direction. What about the TPO chart? Well, here was our previous overnight recent high. There's our recent high from yesterday. It's a normal variation, neutral day, almost a late spike at the end of the day, and opening with a gap. We had a late spike 2 days ago to the upside. We kind of followed that, but we got to a level that was viewed as too expensive. Buyers backed off, sellers took over. Are they still in control? The gap close or a lack of gap close might be a good indication of that. Stephen, what you are saying is absolutely true. There is a lot of weaker structure, unfinished points of control, unrechecked areas. There's a lot of weaknesses down below here. We even know that we have, let's see if we can get back here. We have a series of weak lows. Let's see if we can get even deeper here. Here. Oop. Weak low. Weak low. So we've got a series of weaker lows down here that are really weaker structure, right? And lots of naked points of control, lots of visuals down below this market. We don't know what's going to happen, and those will become important when they become important. So here is yesterday. Again, opening with a gap. If unable to close the gap, we may start looking lower. I'm not expecting huge movement today, even with the job opens labor turnover survey. There's so much going on and so much up in the wind as far as information that's going to affect the markets out there still. I think it's more of going to be a day where we're going to find an area and people are going to adjust inventories and hedge and position themselves for tomorrow. All right. And I want to go right to the NASDAQ because they're wildly different pictures. Yes, we did reject above weekly kickoff high yesterday in the NASDAQ, but we got a much deeper look at it that occurred in the overnight session. So So it's showing excess on the daily, but remember that overnight recent high isn't likely to hold. So we lost open interest in the NASDAQ again. We lost 3,200. So again, some probably hedging and positioning and an inventory adjustment, getting out of some longs. Here's the 30. So here is our recent high. It happened in the overnight session. We couldn't get to it yesterday, but it still remains out there for everybody to see. Well, what are we doing today? Well, overnight inventory, we're largely flat still. We're inside the range, however, and inside value in the NASDAQ. The S&P is threatening to open with a gap to the downside. The NASDAQ is holding up much better than the S&Ps. Maybe something to do with a little bit of earnings, but it's just holding up better. So with no overnight inventory inside the value area, with no gap, with no runs, no hits, no errors, and nobody left on base, I'm going to chill if I'm trading the NASDAQ. It's centrally located inside the value from yesterday. No real change in value. Of course, 9 o'clock numbers could change that in a heartbeat. Of course, anything can. Somebody says anything dumb, that can change, right? But as long as we're kind of accepting value and balance here and from the overnight session, I'm going to chill and try and look for opportunities at the extremes. How about weekly kickoff high or yesterday's high or even the overnight high from Sunday night into Monday? What about the TPO chart? What is that going to tell us? Well, there it is. There's our recent overnight high. Our up move, our rejection. Look at where the market closed. It closed in value. We almost put in a late spike in the S&Ps. Not even a chance in the NASDAQ. It's holding up much better. Overnight range, largely inside the area of balance. The overnight value area inside the regular trading hour value area from yesterday. Man, I got to stay patient if I'm trading the NASDAQ today. Here's crude oil now. We added 4,300 in open interest yesterday, so there is some energy coming in. It's been continuing to build. This is the fourth day in a row that we've added open interest after a pretty substantial loss in open interest up here. So 4 days in a row, we're kind of building energy in this market, if you'll pardon the pun. It's kind of range bound though here, isn't it? I'm looking at the extremes here at 74 and 77. 74 and 77, last week's low, and really kind of the 200 session moving average here. So that's really where I'm going to start to leverage into positions. It is at those extremes. Anything in the middle, I'm probably going to have to be looking at a shorter time frame chart and just looking for smaller opportunities. Take a look at the 30-minute chart here. Okay. Overnight inventory short. It looks like it's driving to the downside now, doesn't it? It looks like we're leaving value. So overnight inventory is continuing to get paid. We get down around 74, last week's low, all these lows down here, there's probably some bigger fish here than we may find in here. So we've left balance. We've got an increasing overnight inventory into the regular trading hour session. You know, negative delta, which is congruent with direction. Rejecting balance, rejecting range value from yesterday. What's the TPO chart look like? So, too humble. What makes a high or low week? Exactness. This is a textbook poor high. The market put in a high, the next, or at some point in the session, the market came back up to that level and took that next step above the previous high. only by one tick. There's no sign of excess here. We call it a poor high because it's likely not to hold for very long. It's holding for now. What do we have down below here? A little bit of excess, a little bit of excess. So, but I don't want to fight this move as it moves away from value from yesterday. I'd rather wait and look for an opportunity down here. So any exactness in levels we kind of consider those weak. People remember those levels, and when people focus on levels, they tend to bring price there. So again, stay cool here in crude. What about gold? So balance is remaining. We've bounced along this trend, this line down here for 2 or 3 weeks now. We added 6,100 in open interest on this move yesterday when the market opened higher and closed lower, adding 6,100. I'm going with new shorts on that. We're still holding this trend, this level here, this 1983 weekly kickoff low. 1983, that's the year I graduated high school. So where are we here? We are holding and creating a head and shoulders pattern here. As long as we continue to hold this, I'm holding this level here, this 1983 level, as the neckline. If we accept below that, we could see a measured move, which takes us from here, 2063 to 8063. So an $80 move to the downside. If you want to measure a head and shoulders breakout, you go from the top of the head to the neckline, and then you go from the neckline down. That takes us all the way down to here, 1900. So I will certainly be keeping an eye on this weekly kickoff low here that has been visited. We wear out the buyers there. We find some acceptance, you go with it. Here's the 30-minute chart. So here's yesterday. Big up move, fails, sellers come in, adding open interest, new shorts came into this market yesterday. It's in essence a double distribution trend day with a dead cat bounce. Settlement was 1990, 220. I'm sorry, I did not get that on here. 92.20. So it's about right here. Overnight inventory, maybe a little bit to the long side, but we're in range and in value. And even more important, there is the possibility of repair. Well, what is repair? Here's the TPO chart. So here's the double distribution trend day. We have a distribution of time and volume here and a distribution of time and volume here. When we open between those after a double distribution trend day, there is a probability where the market will maybe come down and check this point of control and check this point of control. It fills in the previous day's profile just by rotating between those two prices. And we've opened between them, so there is that possibility. Of course, you got to watch the dollar. Got to watch the dollar, of course. So, but, these assumed points of control in these distributions offer the ability to limit risk. So we'll see what happens here by the end of the day. Because we're doing Make Hogue Money early today, I'm most certainly going to do a reflection here at the end of the day. Let me see my calendar. Yeah, I'm going to do a reflection at the end of the day today. So we'll go back and we'll take a look and see what happened here. On all these markets. Here's the euro. It's a similar situation really than then similar to gold, but different still. Here's the volume yesterday. Whoa. Open interest, we added less than 100 in open interest. So there's a little bit of a difference between what happened in the euro yesterday and what happened in gold. This downside auction was really just weak. It really just didn't perform well. It doesn't mean we can't bring in new sellers now. As a matter of fact, look at the volume already here today. So I'm looking at this as quite possibly this upside digestion balance could be at risk. Although, again, yesterday's auction to the downside was relatively weak. Now, this is a little bit different than what's happening in gold because we are rejecting value and range from yesterday, whereas it's a higher probability of gold accepting that because we did open between the distributions because this is also a double distribution trend day. All right, so, we've opened, we've rejected value from yesterday. We're below last week's low. This is what's telling me that this upside digestive market state could be at risk. We get a test of weekly kickoff low. Acceptance of below that would kind of ensure that, right? So here's the double distribution trend day from the euro yesterday. Well, we've opened and rejected value. We've opened and rejected a potential repair day. Doesn't mean it can't still happen. Anything can happen. ACH, that's one of our acronyms here, ACH. But the likelihood is less. The probability is less that we're going to go into repair because we've rejected and are currently trading outside of the range. So again, I'll be maybe looking at these naked points of control down here for some guidance. I mean, this is the TPO and volume point of control from back here that is a visual and may bring the market to it. Acceptance below that, again, leads me to believe that this market state, this upside digestion market state is really at risk. Watch the dollar, though. Here's the 10-year. Big down day yesterday. What is with the volume? I don't even think that this is even possible. Let me see something here. Ten-year. Yeah, it is. I mean, there was less than 1 million traded yesterday in the 10-year notes. See, that happen very often. So does that make this move to the downside hollow? To a degree, it does. We did add 17,000 in open interest, however. That's not a big number for the 10-year. We still have not closed out the gap that created the island low that we have down here. So, last week's low, interesting, nice level. Take a look at the 30-minute chart. So yes, another double distribution, almost a triple distribution to the downside, adding open interest, but on very low volume. Here's the gap that creates the island low that started the rally to the upside that is now at risk. There's that island low. There's the gap that closes it. Unable to get there. Overnight inventory a little bit long, reconciled, inside range and value. Stay patient. Here's the TPO chart. Double distribution trend day. Dead cat bounce. Still in the dead cat bounce. Looking more like we may continue to look lower than go into repair, which again is still entirely possible. What about the natural gas? So we're testing last week's low. Overall, still somewhat range bound. Last week's low is a little bit of a break of that state. Adding 1,500 in open interest yesterday on low volume in a range bound day, not all that impactful as far as the auction process. Now we may be making an impact. Last week's low has fallen. If we spend time down here, the next target would be weekly kickoff low, which is $2.20. We have a gap, unable to close the gap. We look for opportunities in the direction of the gap. We'll look at the TPO chart here. IB high, almost 3 distributions to the downside, adding open interest, yes. Volume, okay. Now here's our gap below the balance area. Possible look down to $2.20, which is this TPO naked point of control. So, it's, again, it was mentioned earlier, it's really all about the context, and context is subjective. Everything we do, everything we think about doing, we have no idea the outcome. It's very helpful to start by looking at what the market is telling us, form hypotheses as to what you think might happen, and when one of those hypotheses comes true, you trade to that strategy. Hopefully, we've helped put a little bit of context over the markets here this morning. We're going to take our deep breath. We're going to stay humble, grateful, creative, and centered. And as Joe says, tranquil in our trading today, hopefully. And we'll look forward to seeing you in Make Hogue Money. Be kind to yourself and others. Pray for peace, and I'll see you in just a few minutes in Make Hogue Money. Have a great session. We'll see you later.